Hi, good evening. This is Scott at Scott Trades on Twitter with StockMarketMentor.com and your chart of the day. I want to take a look at XME. This is a metals and mining ETF, and I'll tell you why. Because as you can see, if I zoom out here to see the last year or so of XME, a lot of the last year or so has been in this sideways consolidative range. 9 months of sideways consolidation. And so I like the fact that this has been consolidating for a while and now, just today, is testing the previous highs. You can see how this area was a level of resistance. We tested it and failed, tested it and failed, and here we are testing it again. Now, if you haven't noticed, the commodities ETF, DBC, is tracking near the highs. And so that kind of has me interested on what the metals are going to do tomorrow with the release of the Consumer Price Index. Are commodities and metals and stuff still going to catch a bid with this new information that we have for January of this year? And so I want to keep an eye on the XME and some of the metals and mining stocks, because some of them are looking really extended, but also really good. And one for example is AA. This is Alcoa, and you can see how this is hitting new highs here, and they don't have earnings until April. So I want to keep an eye on stocks like this because they are in really strong uptrends. And while AA, for example, is extended, it does have me interested on the fact that some of the stocks are hitting new highs, but the XME ETF isn't just yet. And so I think that there could be an opportunity here, albeit this is extended. So I want to keep an eye on this sector for potentially a break higher and then a daily higher low, something Dan Fitzpatrick calls a phase 2. So you have the phase 1 breakout, and then you have the phase 2 pullback to support. And so I want to watch this for a breakout and then a pullback to support. And if that pullback to support comes back to the major moving averages and bounces off, that could give us a low-risk entry using those moving averages as a level to define a risk off of. So while I do believe that this is very extended away from these moving averages, I do want to keep it on my radar, because in the event that this breaks higher and can finally get out of this consolidation, I think we're going to see some trading opportunities in a lot of the stocks that the XME ETF holds. So definitely a sector we should keep our eyes on in this market. So I hope that video was helpful. Hey, give me a follow on Twitter if you don't already, at Scott Trades. And if you want to find out what else we're looking at StockMarketMentor.com, click the link, and I hope to see you on the other side.